Everybody, welcome. This is Intermediate Accounting 17th additional video solution walkthrough. This is for problem 22-6. Textbook authors are Don Kiso, Jerry Weingen, and Terry Warfield. The question used in the presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. So before we say thank you, Wiley, let's go ahead and have some fun. So right over here on December 31st, 2020, before the books were closed, very important, the management and accountants of Madras Inc. Went through and made the following determinations about three pieces of equipment. Okay, so we have over here three different pieces of equipment. Income before depreciation expense amounted to 400,000. Depreciation on these assets other than A, B, and C was 55. Income was originally at 2019 was 370. Ignore all income tax offense, thank the Lord. And then over here, 100,000 shares of common stock were outstanding in 2019 and 2020. So prepare all necessary entries to record the determinations, prepare comparative retained earnings statements for Madras for 2019 and 2020. The company had retained earnings of 200,000 at December 31st, 2018. Okay, so the first thing we're going to go through and do over here is we're going to look at equipment A. It was purchased on January 2nd, 2017. It originally cost $540,000, and for depreciation purposes, straight line was originally chosen. The asset was originally expected to be useful for 10 years and then have a zero salvage value. In 2020, the decision was made to change it from straight line to sum of the year's digits, which no one ever uses. And the estimates relating to useful life and salvage value have remained unchanged. So let's kind of go through over here and look at accumulated depreciation on equipment A. So how much did I go through and record in 2017, 2018, and then in 2019? Well, if it had an original cost of 540,000, it had a 10-year life and zero salvage value. So basically what I would be looking at, the amount of depreciation per year would be 54,000. Straight line acquisition cost minus salvage value divided by the estimated useful life. So over here, this is going to be 54,000, 54,000, and 54,000. Now, when I'm going through and doing this, is that the decision was made to change the depreciation from straight line to sum of the year's digits. It's a change in estimate. We could have a lot of reasons why we would go through and do that. So what I now need to do is I'm going to handle this change prospectively. And when I'm doing sum of the year's digits, this is sum of the year's digits is, well, it's sum of the year's digits. So we have 7 years remaining. We've used 3 of those years. We have 7 years remaining. So if I take the number of years that are remaining, so 7, 6, 5, 4, 3, 2, 1, I get a total of 28. So what I'm now going to do is I'm going to take the acquisition cost, which was 540. I'm going to subtract the depreciation taken to date. Which here is going to be 162,000, and this is my new depreciable base. Okay, so this is what I would go through and do. So my new depreciable base is going to be 378,000. So what do I do next? Well, this is the fun of sum of the year's digits, which you will never pretty much go through and use. So if I take 378 and I multiply it by 7/28, I would get 94,500. And if I go through, let's make sure this actually works, because I never use this method. No one uses it. Oh. So if I go through and use some of the year's digits, so again, I never teach this. And if you're taking my class, I'm never going to put this on an exam, but because Keith is using it, I'm showing it here. This is the amount you would take moving forward. So the amount of depreciation for 2020 over here would be 94,500. That would be the amount of the depreciation expense that I would take in 2020 for equipment A. Okay. And prepare entries. Okay, so the entry I would make is simple as this. I would go depreciation expense, equipment A, accumulated depreciation, equipment A. This will be 94.5 and then 94.5. Remember that whenever you have a change in estimate, right, I would go through and I would now disclose, you just would disclose it how you're taking a methodology that you're using. You're not using straight line for this asset, but you would want to disclose it. We don't change prior numbers, but that's how we would go through and solve this particular question. Okay, let's now go to equipment B. Equipment B was purchased on January 3rd, 2016. It originally cost $180,000. And it was basically to total life of its assets to 9 and estimate the residual value of 3. Okay, so this again is another change in estimate. So how much did we go through and actually take? Well, it cost $180,000 and it had a zero use, basically zero. And so the amount of the depreciation expense that I would have gone through and taken is at 12,000 per year. So if I come down over here, okay. So in 2016, I took 12,000. In 2017, I took 12,000. 2018, I took 12,000. And in 2019, I took 12,000. Okay, so the total amount of depreciation expense that I have gone through and taken to date, got 180,000 is my original life over here. And then now I've got a total sum of 48,000. And so over here, my new depreciable base is 132,000. But what it's telling us is that the decision was made to shorten the total life of this asset to 9 years. So the total life is 9. So how many years do I have remaining? Well, I'm going to have 5 years remaining. So our new depreciable base, which is the original acquisition cost minus the depreciation that has already been taken, is 48,000, is now 132. But I also have a new salvage value, which is estimated at 3,000. Okay, so over here, I'm going to divide this by my new estimated useful life, which is going to be at 5 years. And so my new depreciation expense is going to be 25,800. Okay, so over here, so it's now going to be 12,3120. Depreciation expense, equipment B, accumulated depreciation, equipment B, and this is going to be for 25,800. And we'll just make this all 18. Okay. Okay, so that's how I would go through. And again, same entry description to record depreciation expense. Now, what's interesting about equipment C, it was purchased on January 5th, 2016. The asset's original cost was 160, and the entire amount was expensed in 2016. So if I go through and look at this, right, what is really, was that the right thing to do? The answer is no. So 160,000, right? I'm going to go through and divide this by 10. But what I want to try to go through and figure out is how much depreciation expense should I have gone through and taken? Well, if we look at 2016, 2017, 2018, and 2019, this should have been over here is at 160,000. So right over here, what I'm going to go ahead and do is the amount of depreciation expense I'm going to be going through, basically what I should have gone through and recorded for each of these years should have been 16,000 each year. And 2020 is no different. So 12/31/20 depreciation expense, equipment, basically equipment C, accumulated depreciation equipment C, and this should be 16,000 and then 16,000. Now, the crazy thing is that I have to kind of go through, and if this thing was expensed, I have to kind of go through and do some magic. And let's kind of look at that magic behind the scenes. When the equipment was purchased, if it was originally charged to repairs and maintenance, if it was charged to expense, what I would need to do is I would need to go through 12/31/20 is I would need to restore the equipment. So I'd show over here equipment. And the equipment over here would basically be showing at 160,000. Now, in terms of the accumulated depreciation on the equipment, how much should I have had to date? Well, the amount I should have had to date is going to be a total of 64,000. That's the amount that should have been recorded through December 31st, 2019. Now, if I can go over here, so we're just focused on 2020, we're not doing anything else now. What happened when this equipment was originally purchased is that if they took it to expense and they did an expense over here for 160,000, right? What happened to this expense? Well, the expense would have been closed out to retained earnings. So over here, right, basically my expense gets always my revenues, expenses, and dividends, because these are temporary accounts. They're always going to be closed out to zero. And these are going to go to retained earnings. So over here, I need to adjust my retained earnings. And this will be adjusted over here for the difference, or 160 minus 64, or 96,000. So this is over here to restore equipment to proper value. And this over here is to record depreciation expense. So this is how I would choose to go through and how I would go through and record it. And just give me a moment. Okay, we're all good so far. Okay, now here's where the fun begins. Is that right over here? Blue swash. Okay. Just going to give it another couple more seconds. Okay. So when I look at this over here, my beginning retained earnings was $200,000. What happened is that my retained earnings account, right, was improperly debited for 160,000. However, how much should have this been debited for? Well, 160,000 is not correct. It should have only been debited, in fact, basically for these 3 years, or of 48,000. Because over here, this is 2016, 2017, and 2018 depreciation expense. So if I went through and debited retained earnings for 160 when I should have only debited this for 48, the difference, or 112,000, is going to be my prior period adjustment because I took too much expense, right? I should have only, within these 3 years, I should have only taken depreciation expense of 48,000. I took 160, so the difference is 112. And again, as I'm going through and doing this, I'm restating 2019, or I'm relooking at 2019. So as I go through and do this, my retained earnings as adjusted is going to be right over here at 312,000. Now, my net income is going to be how much? Well, my net income is going to be what I originally had reported this at 370,000 minus the depreciation expense of 16,000. So this is going to be 370,000 minus 16,000, which is 2019 depreciation. Remember, equipment B and equipment A were done properly. We just changed the estimates. So over here, what I'm more focused on is the net income, and the net income originally before at 370. We know that that was incorrect. It should have actually been at 16,000. So over here, when it comes to my less dividends, my dividends were 0. So my ending retained earnings at 12/31/19 is going to be satanic, or 666. Okay. Now let's go over here to 2020. My ending retained earnings as of 2019 becomes my beginning retained earnings as of 2020. Okay, so that becomes my beginning as of 2020. And in fact, I'll just kind of move these over a bit. Okay. So right over here, my ending becomes my beginning as of 2020. So my net income, right? So I'm going to add in my net income. My net income before any adjustments was 400,000. However, I haven't yet recorded any of the depreciation expenses. So I'm going to have depreciation expense, equipment A, depreciation expense, equipment B, depreciation expense, equipment C, and then depreciation expense, other assets. Okay, so right over here, my depreciation expense for equipment A, we said was 94,500. For equipment B, it was 25,800. For equipment C, it was 16,000. And then my depreciation expense on other assets was 55,000. Where am I getting the 55,000 from? It's given to us as additional data number 2. So when I go through and add up all of these amounts, my net income as adjusted for depreciation expense is going to be over here. So I'm going to add up these amounts here, and I'm going to come up with 207,800. So my dividends are at 0. And so my ending retained earnings as of 12/31/20 is going to be 666,000 plus 208,700, or 874,700. Okay, so that's kind of where we are. Thank you for joining me here today. Sorry for a little bit of the slip up about how we came through and got that adjustment. So I'm going to go through and edit that video to make sure that gets out. And then right over here, I want to thank you, Wiley, for allowing me to share these presentations with you here today. And I look forward to seeing you on the next video. Have a great day.